Hello, everyone, and welcome to Maximizing Equity Compensation in Job Offer Negotiations. Welcome to our annual webinar. We usually do this at the beginning of every year. It seems to be the appropriate time for that. And before I start, I do want to acknowledge that it has been a very quiet few years as it comes to negotiations. It has been definitely an employer-driven market. There have been many layoffs in the last few years, and even right now, it is a bit more difficult to negotiate. Many of you are from the biotech, pharma, and tech sectors, and these are the industries that have been definitely affected by layoffs in the last few years. There's a tremendous amount of talent looking for work, so that makes it even right now an employer-driven market. So acknowledging all of that, I want to make sure that I give you my opinion and my experience of the last few months, and that is it started to change. So I started to again get requests in the last few months from my clients and folks reaching out to really help them start the negotiation process. So it's definitely changing a little bit. So let's move along. Let me very quickly introduce myself. All right. So my name is Beata Dragovic. I'm not even sure if I said that just before. I'm originally from Hungary. I was born in Budapest. Right now I live in the South Shore of Boston with our English bulldog and my husband. That's actually, I go to Hungary a lot till today's date. That's us, my husband, myself, and my sister and her family in front of the Chain Bridge just a few months ago. We love doing everything outdoors, and that's me and my husband in front of the Mount Washington. Just a few years ago, we were hiking it. I founded Freedom Chair Financial in 2013, have been in the industry for 24 years. Freedom Chair Financial is an independent wealth management firm. We are located in Boston, but we have clients all across the US. We help a lot of folks with equity compensation strategies. Sorry about that. We do have a very strong foundation in comprehensive financial planning, and we do have therefore a long-term planning relationship with our clients. So what is it that we are going to talk about today? So I always say this is a two-part series because many of you request consultation throughout already the webinar. Feel free to do that as well. We have our QR code right there. Book a 15-minute intro call with me with any questions you might have. What I would like to accomplish today is based on what I was telling you about the job market and how tough it has been in transition. I still would like to go and look forward a little bit and really answer and talk about what the questions that I'm answering the most and what we are solving when we are actually negotiating for clients. And we're going to talk about what is negotiable and how to approach negotiations. I would like to answer that. Then briefly, we will talk about the most common equity awards that you actually are negotiating for. This webinar is, again, we're talking about a little bit of everything, but definitely our focus is on equity compensation because many of you in these industries, biotech, tech, pharma, are looking for, obviously, equity compensation as part of your compensation package. And that's what we help the most with. And then we after we discussed what's negotiable, we review the most common equity awards. We're also going to talk about how you should be thinking about this as your overall financial plan. And I will show you how you should be using your current benefits as basis for negotiations. I will talk about a little bit, as I mentioned, there's still decent amount of layoffs happening. So we will touch base on a job termination checklist just to what is it that you need to think about. I made sure that I have that at the very beginning. And feel free to ask me any questions. Usually questions in these webinars come afterwards on a one-on-one session. So feel free to, again, use the QR code or go on our website, www.freedomsharefinancial.com. And I'm very happy to answer any questions for you. All right. So again, the immediate question that I would like to answer is, by the way, before I just one more housekeeping item. Obviously, I know time is always of essence here. So based on experience, what I do is I do a very brief 20, 30-minute webinar just to really have you understanding how you need to think about this. And if you have any questions after that, please just let me know. I don't want to lose anyone because I'm talking here for an hour. So what is negotiable? That's the first question that that I'm always, and when is it good to negotiate, right? So definitely time of hire has the most leverage for negotiation. So if you are looking to, if you have a job right now and you are looking to make a transition, that's probably the best position to be in. Obviously, it's a tiny bit harder if you don't have a job, because you have a little bit more urgency, and you're also not as much able to use. You are not able to use your current benefits as basis for negotiations. And I see sometimes definitely some folks, requesting more equity during your annual review period. That can be an opportunity, but without a doubt, when you change jobs is the best. So what is negotiable? Well, basically just about everything: base salary, sign-on bonus, just equity compensation, stocks, stock options, RSUs. In the last few years, we again started to see that equity choice, the type and size of the grant, is also negotiable. And some companies started to, again, allow you to choose if you would like to have more stock options or RSUs, obviously those who offer both. And then severance package, for those of you in C-level roles, in certain VP and C-level roles, you are able to negotiate severance package as well. What you would negotiate for? Well, obviously, one of the major, as it comes to equity compensation, you really want to think about extended time period to exercise options or accelerated vesting of stock options. Those are the two major factors that we see in equity comp negotiations as it comes to severance. And again, further, what is negotiable, right? So as I mentioned just before, the type of role that you are applying for obviously will determine the level of negotiations you can have. So what I mean under that is, obviously, if you are applying for a director level role, many cases, especially with public companies, there is an HR grid for that, and there is a salary range, equity compensation range that you will fall into. Once you can really have, and you really have more leverage to negotiate, that's when you are applying for a VP level role or for C-level roles. What also will make a difference is what kind of company you are applying to. So pre-IPO private companies, and even I see even director level roles, you have a way better opportunity to negotiate more equity grants. So those are the companies that will give you potentially more equity than even higher salary. And that's actually, obviously, it is a time when it's a really bit harder to grasp what is the valuation for those companies, because that can change, as many of you know that very well. So pre-IPO companies, but companies that are already getting closer to IPO, again, that's when you can really have, again, further the extent of the negotiations and ask for stock options, RSUs. That's the time also when the 409 valuations, right, what private companies offer, valuations of the company, that you can trust it much more. And you will be able, we would be able to, and you are able to negotiate a bit more. What I always say to everyone, most importantly, that always base your negotiations for your own financial goals and priorities. And I will have a very good slide for this later on that I even further tell you what I mean. But simply, again, here it's important to mention as well that if you know your financial goals, if you know what your intermediate needs, right? So you have a growing family, you are about to have a new baby, or you have intermediate goals such as buy a second home, or you're taking care of parents, you need more cash flow. You will probably worry about more negotiating for base salary, potentially sign-on bonus, than what you will worry about equity, especially in a private company, when you are not sure when you are actually going to see the benefits of that. So that's in general. I don't see any questions. Again, feel free to ask me any questions or just request for time with me. But these are basically some of the basic as what's negotiable. And before we go further on that, as I mentioned, we are in a time period that many folks are still getting laid off. I wanted to just mention, if that would happen to you, that your jobs has been terminated, I just want to just give you, it is a stressful time. So just a few very important points, nothing tremendous there that you couldn't have thought about, but definitely take advantage of meeting with human resources, because they might be able to point out something in that benefit that you don't know. Review employer provided health, disability, life insurance policies. If you don't have health coverage with a spouse, potentially, you might need to go on COBRA. If you have children and life insurance is important, or if you do need life insurance, make sure that figure it out if your life insurance is portable. In certain cases, it is. Then look at your 401k plans. What is it that you are able to do with that? Should you leave it where it is? Should you move it into your IRA? There is something that you need to think about there. If you receive deferred compensation plan, you want to think about, is there a lump sum opportunity there? So make sure that you meet with a human resource specialist and review all the questions on that. And then obviously review your equity awards, right? And we will talk about this again, but when you are leaving a company as well, you want to know what is it that you can do, or if you are being laid off, you want to understand what is it that you are able to do with the equity that you have. And this will be the basis for negotiations if actually you are negotiating for a new role while you're still employed as well. So review the plan documents. There are multiple plan documents, summary plan, as well as your stock document. And many times there are some different wording in all of them. So as it comes to know the type of awards you have, many clients come to me and they have no idea that they have incentive stock options or non-qualified stock options. There's different rules. You will usually have, nearly in all cases, 90 days to exercise options. And if by any chance they are ISOs and the company allows you to have an extended time period to exercise options, which I've seen last year. They're not going to give it to you at all times, but when there are a lot of layoffs, some companies will allow you to do that, negotiate at the end. What happens to incentive stock options, which would be tax-advantaged options, unfortunately, they become non-qualified stock options. So know what you have so a professional can help you understand the taxation rules of all of this, right? Different for non-qualified and ISOs. Today's webinar is not about going into deep onto those, but I just wanted to note that. Then with private companies, right? Many of my clients lead private companies. They still believe in the company. And but unfortunately, there is lack of liquidity. So if you leave a private company, you have options, you are able to exercise them. You need to come up with your own funds to exercise those options. There still can be tax consequences at the same time. It's just, you just need to use your own funds to exercise options. So you need to pay attention to that as well. As it comes to restricted stock units, in most cases, not in most cases, at all times, unvested grants are lost. So there's no discussion on that. That's at all times. Okay. So what are those most common grants that you negotiate for as it comes to equity? We'll spend literally a minute on this. Those are stock options, restricted stock units or restricted stock, and performance shares. You don't necessarily negotiate for performance shares. Let's start with that. They are part of your long-term incentive plans most of the time. They are tied to meeting usually a specific future goal, such as profit target. Many of you probably know it very well. And they are pretty much like RSUs, but tied to a target. Then if I started on the right side, let's go back, RSUs and restricted stock. So these are company shares transferred from employer to employee. The slight differences in between RSUs and restricted stock, you probably 95% of the time receiving RSUs, but it's again it's beneficial to look at if by any chance you were granted restricted stock, because that's pretty much the only one that allows you for a Section 83B election, and that is basically allows you to pay taxes at grant versus at vesting. So RSUs are ordinary income at vesting. So that can be beneficial if the stock is successful and has an upside potential. It also has risks if by any chance the stock doesn't take off and you pay taxes at grant. And stock options, basically a right to buy company stock at a grant price. There is, once vested, you can exercise the options. Obviously, the option has to be in the money, so the current price of the stock has to be higher than the grant price. And stock options can be risky, but also have very nice upside potential. And why I like to bring this up again for today's webinar, what's important is obviously stock options have a tremendous upside value and leverage. They are a little bit more risky. You need to understand your own goals. Again, this is what I like to say. In many cases, initial grant, initial negotiation, you might not be able to request whether you want more options versus RSUs. But for example, with annual long-term incentive plans, I have clients continuously coming to me and asking me, what is it that I should get more, RSUs or options? And that's what matters. RSUs is a stock that you will definitely receive once there is a vesting event. So definitely understand your own tolerance for risk and what is it that you would like to earmark these grants for. And leverage, this is when we are coming to negotiations and how you would be leveraging your current benefits to negotiate a new offer. Okay, so as I mentioned, I will be coming back and talking a little bit about why is this important again. Some of my clients love this really organization chart because it not just shows you what is that you are able to negotiate for. Obviously, you can't negotiate all of this at once, but it really summarizes and gives you an idea what is it that's important for you. And what do I mean under that? So again, what's negotiable? Just about everything, right? Again, as I mentioned, you have leverage. If more leverage, depending on the role you negotiate for. At the same time, everyone should negotiate. And how do you negotiate? So in many cases, again, I didn't talk about this at the beginning, is in most cases, there's multiple ways to approach this. I found this to be really useful, that HR will expect you to negotiate. So what I always advise my clients on is that one way to do this is when you received your initial offer, you are able to ask, okay, what is negotiable? And they usually will give you two opportunities. So they might say salary and initial stock grant. I'm just saying something. They might say just nothing, or they might say as well that salary and sign-on bonus. Okay, so again, it depends on private company, public company role. So it will depend on a lot of it. And what I always advise is that you always look at your own financial situation and, okay, what is important? Is it important? Am I on track for retirement? If I'm potentially don't feel I'm as much on track for retirement and I'm applying for going to a private company that I'm not sure what's going to happen with the equity, then I try to negotiate for salary because that will affect my 401k match in the long run. Some of the companies in biotech pharma sector give really high matching contributions and discretionary contributions. So that might be more important for you than an initial stock grant. Then that's fine as well. But know that one will have the effect on the other. And obviously your base salary will have an effect on annual target bonus and so on. And I also want to mention is that, long-term incentive plans, usually you don't negotiate upfront. At the same time, that usually in most cases, when you are negotiating, there is a implied offer in most cases what you can expect for long-term incentive plans. And that's something that you can take into consideration as well. And again, it's a total rewards. Employees, all of you, all of us by now are interested in a quality of life. So we are interested in vacation days, wellness, just about all the other benefits that are out there. So not necessarily just pay and equity compensation. All right. So why do you need to know your benefits in order for you to negotiate for equity? And this is when I mentioned at the beginning that I'm going to show you how to use your current equity compensation to request a new equity and negotiate your new offer. I just had a case literally. I want to tell you, probably a month ago, someone from out of state wants to come to Boston to a biotech to negotiate. And I'm going to tell you this story, what to do and what not to do. So probably this individual looked some of my recordings and took this next part into consideration that I said, use your current benefits as a basis for your negotiation. Well, you can do that, but you cannot just ask for just about for everything. So there's going to be certain factors such as pension, current 401k match, that companies will not care about what you leave behind. And in most cases, again, what I want to mention is that this individual ended up requesting 5 different things for a new offer negotiation. It does not work that way. So unfortunately or not, you are not able to go to the new company and tell them that I'm leaving all this behind. I'm very excited to come, but I'm leaving all this behind, and I would like to a higher salary, higher target bonus, higher sign-on bonus, and higher equity. They will just, most cases, that's not going to be possible. So with that said, understand again what you leave behind. And for example, why you need to understand this as well, because if for you it's important you have a 401k plan and a very good match, then that should be a decision for you whether you would need to move on and go to the next company. You want to look at your vested stock options, right? Understand the documents, incentives, all of that. Take inventory of your non-vested benefits, right? So unvested RSUs, stock options, current long-term incentive plans. And I will tell you why. Even though the long-term incentive plans is never basis for negotiation, nearly everyone will tell you, we don't care what you leave behind in long-term incentive plan. It gives you pretty much an idea what is that you leave behind. Another story here is that I had many, many years ago, someone leaving a big pharma company for an adventure to go a small biotech. And the big pharma was giving, really generous annual long-term incentive plans. And we literally had to have a discussion with the client that, are you able to leave behind this given annual benefit, which was significant? And will you able to still retire at 65, leaving that behind, going to the new company? Yes, great salary, potential company, the company was pre-IPO, company can go IPO, it can have a really good future potential, but is this worth taking a risk to leave behind something that's given for a risk, for an adventure to go to another company? So you need to understand yourself what is worth, and you understand your current financial situation, what is it that's worthwhile doing as for a move like that. So really your vested and unvested grants are both basis to calculate the forfeit value of your equity grants to help negotiate a new offer. And I'm going to show you now 2-slide case study that is kind of interesting. It's a little seems technical, but I'm going to explain to you what is that's happening here. And this is how we actually have clients go to the negotiation table and say, okay, so even though I have unvested value XYZ amount, the forfeit value of my total compensation is actually much higher. And you need to know that. Even if you, by any chance, we use Black-Scholes valuation to figure out for clients what is it that they leave behind. Even if you don't have that, understand that in most cases, the forfeit value is much higher than just the unvested grants that you leave behind. So this is a case, right? So XYZ individual has a current vested RSUs 200,000 with the company. Current vested options are $500,000. Obviously, you have to take into consideration taxes, and then total equity grant that you are, even if you leave the company, but you can exercise, it will be yours, is, let's assume, 700,000. This is an example. And then you are also leaving behind, you can see on your summary pages that you are leaving behind 300,000 in unvested RSUs and stock options. So the question here is, okay, is that all that I'm leaving behind? Can I move on? And if I get at least 300,000 worth initial grant, or with a few LTIP awards, will cover what I'm leaving behind? So you knew the answer is no, because I already told you. So the actual forfeit value of the current grants is basically much more, because Black-Scholes valuations is what majority of the companies use for calculating option values. And there is a time value of the vested stock options, full option value, and intrinsic value of restricted shares. So for example, in this case, obviously, it's a calculation we use a software for. Instead of the 300,000, there is actually a $650,000 value. And obviously, options you can exercise up to 10 years, just to give you an example. And obviously, the higher the stock price, there's a bigger difference between the current stock price versus the grant price. there's less future opportunity in the options. So to translate some of this, what we are doing here, how we calculate this to everyday language. So that's how you do that. So obviously, what I'm not in this case, this individual is really leaving behind around 650,000 in benefits. So then you can go to again, this was a VP role, more or less a kind of an exact scenario, but this was a VP role. And in this case, we went to the negotiation table and really requested that obviously you want to make sure that your initial grant, let that be stock options, RSU, combination of the two, will at least cover what you are leaving behind in forfeit value. Again, the role that you are applying for will definitely dictate whether you are able to have these negotiations. And as soon as you are applying for a C-level, VP level role, obviously the board is involved. So that will take obviously a little bit longer as well to negotiate and going back and forth. So let me just say, I said I'm going to leave. I think I'm pretty much on time. I want to cover just really with a few more very important, just to really wrap this all around and really cover, come back to what's important here, right? So revisiting your financial plan, making sure that first and utmost, you define your own life goals, right? What kind of financial planning goals you have. Again, I mentioned to you that we do everything pretty much as part of a comprehensive financial plan. So it is crucial to me that always, even when you are negotiating for a new role, it always comes from that. And you always start by figuring out what are your short, intermediate, long-term financial goals. And are you on track towards your goals, right? So do you have to educate children, and how far is college education? Are you on track for that? And once you know all of that, then what I would say is I like to flip it around and really make decision about your equity grants based on that. Once you answer those questions, so let those goals drive your decisions about, am I choosing stock options? Am I choosing RSUs? Or am I taking that new role if I have the choice? Again, I want to acknowledge that I fully understand, and I want to, again, for some of you who probably were not here at the very beginning when I started, is that the last few years, these negotiations kind of nearly disappeared. So again, I'm not sure, I'm bringing this again up because I'm not sure exactly when I started, everyone was listening or here yet. I just want to acknowledge that literally 2021 was very busy for us. Many folks were negotiating. That was still especially in the biotech, pharma tech industries. There was a lot of movement, a lot of need for demand. Again, what happened is in the last few years, right? It absolutely we stopped helping clients negotiate, and it's finally starting to pick up again, even though it's still an employer-driven market. So work with professionals, create a multi-year plan if you know it. One other factor here is I always ask at year end, I always ask my clients, are you planning to make a change? If by any chance you know this year that you would like to make a change next year, and currently you do have options and various equity grants, then it's really useful for you to see if you can potentially exercise options over 2 years. So and create a tax planning strategy as well. And always understand volatility, right? So understand that just because, let's assume you are applying, the stock might not take off for years. Make sure that you are on track for your financial goals without your equity compensation as well. And the equity grants that you receive that can be just above and beyond that additional assets to earmark towards your goal can help you retire earlier or can fund a goal that you didn't think you would be able to do. So definitely make sure that you understand if it's a private company that it takes a lot for the company to go public. And even if it goes public, you exercise your options when the company is private, you still might not be able to sell because there is a lockup period. So understand all the risk and volatility in the stock market. The last few years showed that to us. So again, I can see that if you have any questions for me, again, as I mentioned, that this is really the time when I get a lot of in-person, a lot of requests for consult. That's a QR code. Please feel free to reach out to us and find the time. I'm very happy to discuss any questions you might have. You can also go to freedomtrailfinancial.com and request a consult there. It takes you to the same place. And thank you so much for listening in today. I hope you found our webinar useful. And if you have any questions, please reach out. Everyone have a great day. Thank you.